Here on The Colour of Country Life, we're joined again by Episode3.net's Matt Dalgleish. Matt, how's it going?
I'm good, thanks, Ricky. Thanks for having me on.
Not a problem at all. Look, let's look at the overseas side of things when it comes to cattle and sheep first of all. The export numbers are looking pretty rosy.
Yeah, that's right, particularly for lamb exports. That's another really good month. We saw total exports over 26,000 tonne for the fourth time this year, in terms of a fourth month this year. So, yeah, that was a really good outcome and very strong numbers. The US, again, the big driver there. If you look at volumes for October for Australian lamb exports to the US, we're running about 34% above the normal trend. So really strong demand we've seen from the US for the last 2 years, really, for Australian lamb.
And I guess in the US context, is that partially because there's, well, first of all, a La Nina that is a negative impact for them in terms of drought, but also a growing sort of cosmopolitan restaurant audience, if you like, that are looking at more lamb on the plate?
Yeah, the US, it's fairly unknown, but the US do produce some lamb, but it's not a lot. But also it's not a big part of their meat diet, but that is growing. So in the last few years, since COVID, really, there's traditionally in the US they would the consumer there would eat lamb in a restaurant, whereas through COVID with lockdowns, a lot of people weren't going to restaurants, but there were some that started to be a bit more adventurous at home and started cooking lamb at home and realised it's a fabulous product that you can cook pretty easily at home. So that's seen some of this growth continue in the last few years since COVID.
That's, an encouraging trend for our producers, even though I gather Australia-wide it's more perhaps over in the west and the north that the live exports would be happening, but nonetheless it's a demand driver for, I guess, domestic prices ultimately.
Yeah, that's right. I mean, if you look over the last 2 decades, the real growth in the sale yard price of lamb has been underpinned by the growth in the export market for the lamb exports particularly. If you go back 2 decades ago, what we produced domestically, we were only exporting about 25%. That's of lamb products. And nowadays we're up around 65% of what we produce in terms of lamb alone is exported. If you look at mutton, it's like 95% goes overseas nowadays.
Yeah, and looking at the local sale yards, there's been a fair bit of activity in South Australia, Victoria and New South Wales as well.
Yeah, that's right. Particularly in Victoria, we're starting to see those numbers come through for the spring flush. So the week prior, we had about 90,000 head of lamb across the Victorian sale yards, and if you compare that to the previous week, it was around 55,000 head. So we've nearly had a doubling of lamb numbers in Victoria, and that's not uncommon for this time of year. And as we head further into November, we're going to see those numbers continue to grow, into the kind of mid-100,000s.
Looking across the Meat and Livestock Australia indicators, actually, usually Wagga's pretty strong in terms of volume. It was down this week. Did producers decide to go a bit closer to home when they went to market?
Yeah, look, and some of the issues there, I mean, we've got still some flooding issues in and around New South Wales in particular. So, that can impact upon movement of animals, and you can see some of these kind of price movements reflect some of that difficulty in transport or that difficulty in transport getting to the sale or getting to the abattoir or so that's kind of causing a bit of grief there, and that can sometimes have a bit of a price reaction. Yeah,
well, it certainly has. In Wagga, there's a shortage of sheep, means they've got the best price across all the rankings in the last week of trade. Let's look at cattle. Looks like a bit of same old, still a fantastic price in the long-term averages, but the price is pretty much stuck where it is since about August.
Yeah, that's right. I mean, if you look at something like the Eastern Young Cattle Indicator, it's slightly softer. I think in the last few days or so, it's drifted down, to the low kind of $10 kind of level, but it's been trapped around that, $10.30 for about 4 weeks or more. So just kind of treading sideways, and we have seen some easing of pricing for things like heavy steer. The last few days, that's kind of came down. I think it's dropped about 20 or so cents on the week, and about down about 35 cents for the month. But we're still, historically, like you said, we're still sitting pretty good. We're about 4.50 cents a kilo live weight for heavy cattle, and that's very strong pricing any way you look at it.
Yeah, I think despite the dip and the panic about potential for foot and mouth disease, nonetheless, we seem to, on a positive note, have a stabilised price over the last calendar year of between $10 and $11.50 for cattle across the board.
Yeah, that's right, and that's reflective. This is our third really good season. The herd rebuild is well and truly underway. And with this rain's been problematic for people that have been flooding, of course, Ricky. But and it's provided some logistical issues as well. But the net result is though we're going to have once the rain stops and we get into warmer weather, we're going to have a heap of grass growing because of that moisture profile. And that's going to mean, for people wanting to continue to restock, whether it's cattle or sheep, you're going to have plenty of opportunity to grow them out on some fabulous grass. So, that's kind of keeping prices underpinned as well a little bit too, that knowledge that there will be a lot of feed available.
Now, Matt, just before we go, are we potentially seeing some problems on the labour side, not the political labour side, in terms of the workforce side in processing going forward? Is there going to be an issue with them being able to process as much as the landholder wants to sell with their cattle and sheep?
That is a definite concern moving forward, Ricky. We've had, through COVID, obviously there's its own issues, but we've had ongoing battles since then trying to attract workers. If you look at the volumes of visa holders coming through over the last financial year, skilled labour I think was down something like, as in skilled permanent labour on visa was down something like 50% from the previous season. So we're having difficulty attracting those kind of abattoir workers, and as I said, we're in the rebuild phase now, but we're still, if you look at cattle, we're slaughtering around 6.6 million head of cattle this year, and that's still below average. The normal numbers are like 7.5, 8 million head a year. So, if we're having capacity constraints now in our abattoirs, and we're not yet rebuilt the herd fully, we haven't rebuilt the flock fully, give another year or so and we're much higher numbers and much higher production coming through those abattoirs, I'm not sure how we're going to find the labour to be able to process at these peak times. And that's going to mean, difficulties, backlogs, bottlenecks in the supply chain, which isn't great for producers.
Well, it might land in the lap of Labor and politicians to open up the borders or at least get the visas fast-tracked so we can get the workers. We'll see what happens on that front. Matt Dalgleish from episode3.net. Thanks again for joining us on Flow.
Cheers, Ricky.